A lot of people are eager to invest, but unfortunately, most people don't have enough money to make good investments. Because if you invest your $1,000 that you heard was saved, you probably will lose or make it 3 or 4% a year, which is not worth it. So the question was recently crossed my mind was what's the best way to invest if you don't have a lot of the money? How do you spot great opportunities at the right time, such as Bitcoin? If you have invested that $1,000 in Bitcoin just a year before it was crashed, you would have made at least 1,000% on your investments. But Bitcoin is just the most recent example. People have been making millions, if not billions, by taking advantage of such opportunities all the time, such as the 2008 crash. So, how do you find a million or the $1 billion opportunity? That's the questions we will answer in this video. But first, we have to understand how economy works. Our economy is very predictable. It grows slowly, then skyrockets, and once it peaks, it suddenly crashed. Then it starts recovering and growing again. The same cycle repeats over and over, but in general, the trend is upward. And your job is to invest here at the bottom and cash out at the top. But how do you know where exactly we are now? Let's understand that by taking an example of the 2008 crash. In the 2000s, when the stock market crashed, investors didn't know that to do with all of the money they had. The stocks market was too risky and the government bonds had extremely low returns. So financial institutions came to with the brilliant idea. A lot of the people wanted to buy the house and the banks would give them a mortgage if they had a good credit score and a sustainable income. At some point, banks had a lot of the mortgage and decided to sell them to invest banks. Investment banks realized that they were good, safe investments and with much higher returns than the government bonds. So they bought thousands of them, grouped them together, and sold them as securities to other investors. It's pretty good shame thinking about it. People get an opportunity to buy a house. Lenders makes money by the selling those mortgage, and investment banks also make the profit by the turning them into securities and selling them to investors. And investors get a decent rate of return. Everyone is happy. But there is when things went wrong. Since these investors were good, more and more investors wanted to buy them. So lenders had to provide more mortgage, but everyone who could afford a house already had one. Therefore, banks lender started lending money to the people with bad credit scores and without a sustainable income. The logic behind it was simple. If they won't be able to pay back the mortgage, they would simply take back the house and sell it since home price were rising. And secondly, as soon as they created a mortgage, they will sell it to investment banks and it will be their problem. Investment banks didn't give it a damn because they knew that they will sell them anyways to investors. So they borrowed huge loans to buy them and sold them again to investors. Everyone was making money. However, at some point, those borrowed who didn't even have a job weren't able to pay back their mortgage, so they defaulted. The bank took their houses and put it on sale as they had planned it, not a big deal. But more and more people started defaulting and more houses were on sale. However, everyone who could afford a house already had one. So this oversupply caused house price to decrease, which means lenders and investors banks were left with thousands of dreadful mortgage and houses they couldn't sell. Investors stopped buying them because they already had enough of them. That causes the panic in the market. Everyone was trying to cash out before it's too late. But investment banks weren't able to pay back their investors because they have spent all of their money on the mortgage that are worthless now. So they started declaring bankruptcy, one after another, and that only created a bigger panic. Banks who provided these loans in the first place also couldn't pay back their depositors, so they had to shut down as well. The entire stocks market was down, drawn graphic. The market was $1.2 trillion in value. Bank of America stock's price, for example, fell from $26 to under $6. Everyone was afraid to invest. That's when investors like Warren Buffett stepped in and made huge investments in the Goldman Sachs, Bank of America, Dow Chemicals, and many more, because he understood that in a couple of the years the economy will recover and will start growing again, and these companies will regain back their value. Economic cycle grab. And that's exactly what happened. The government bailed out many companies, printed trillions of the dollars, and saved the economy from the long-lasting recessions. And we had another period of economic prosperity. And Warren Buffett made $10 billion from this crisis, according to the Wall Street Journal. We will have another crisis sooner or later because we have created many bubbles that are waiting to burst, such as the student debts. The only question is when. It might happen this year, maybe next year, maybe in a few years, and if you are ready, it might be your chance to make incredible fortunes. But without basic knowledge of the stocks market, you will not stand a chance. So here is the course from the business council. He had done a pretty good job covering everything you need to know about the stocks market. It's funny and fun to watch. You have to watch it. You are serious about investing. In fact, if you use the link in the descriptions, you will get it for free. Thank you for watching, and I will see you in the next one. Bye.